Hello friends, welcome to Investable. Today we are going to learn about how to create and do adjustments in calendar spreads. Before going into the video, please subscribe to my YouTube channel and follow my Telegram group. In Telegram group, I will be posting all my trades and live adjustments. The link is given in the description, so you can follow the Telegram group. So let's begin the video. So first we will see what is calendar spread. So the calendar spread is nothing but selling a call or put from the current expiry and buying a call or put from the next expiry. So there are different type of calendar spreads. So one is put calendar spread, where we will be selling current expiry at the money put and we will be buying next expiry at the money put. So this is called put calendar spread. Similarly, we can do call calendar spread. So in call calendar, we will be selling current expiry at the money call and next expiry at the money call option. And similarly, there is also diagonal spreads and then double spreads. So we will see one by one all the calendar spread option strategy in our channel. So today we are going to discuss about double calendar spread. Okay. So I have opened offshore.definage.com. So I will give this link in the description. You can log in and you can create your own strategy. So now we are going to check how to create calendar spread and what is the margin required, what is the profit and what is the risk reward. Today I am going to create the calendar spread in Nifty. So first what we are going to do, we are going to sell call and put from the current expiry. So we are going to sell out of the money call and put. Okay. So what is the current price? 17,895, 17,900. So in today's strategy, I am going to sell out of the money call and put. First we will select the put option. So for this I am going to select the premium around 25 to 30. Okay. So we are having premium 25 at 17,600. So I am going to sell one lot. And similarly in the call side I am going to sell around 25 rupees premium, okay, which is 18,150 call option. Okay, I am going to sell one lot. Okay, next what we are going to do, we are going to buy next expiry, that is 21 October call and put, which is similar premium to the current expiry. So we are going to buy the put premium around 25 rupees, so which is 17,350. Okay, so I am going to buy this put option. Similarly on the call side, so we are having 25 rupees premium at 18,350. Okay, this is our payoff chart. So the premium required is 47,000. Okay, so approximately 50k. So our maximum profit is 2,676, so which is 5.6 percentage. So max loss is 13,200. Okay, so break even 17,535 and 18,228. So what is the current price? 17,900. So around 400 point in the downside and 300 points on the upper side. Okay, so now we will see when to create this calendar spreads. So whenever there is a low wicks, so we are going to create calendar spreads. So why? Because the premiums are going to be very less, and when the wicks is started increasing, the premiums will increase. So we are going to make profit from the next week expiry, that will increase more than the current week expiry, or the next week expiry will stay at the same place, current week expiry will go to 0. So the difference between current week premium and the next week premium is going to be the profit for us. So now we will create one backtest and we will see how to adjust the strategy. Okay, for that what I am going to do, I am going to open India weeks chart. Okay, so keep it in line chart. So when we are going to make the calendar spread, so whenever the India weeks is less than 16, so we are going to create calendar spreads. Okay, so I am going to draw one line at 16 and we are not going to create the calendar spreads if the weeks falls below 13, because all the premiums will be very less and there is no point in creating any option selling strategies. Okay, so now we will select some particular date where the VIX is low and it is keep on rising. Okay, so here 14th September, so VIX is around 13.5 and it is keep on rising. So when the VIX keep on rising, what happened? The current expiry option price will not reduce immediately and it will create some trouble. So we will select this week expiry and we will see how to adjust the strategy. Okay, so let's go to Opstra. I'm going to option simulator. So that is 14th September, which is near to 16. So I will select 23rd September. Okay. The start date we are going to make 1 week earlier. Okay. So we selected 23rd and I am going to create this strategy on 16th. So payoff date 23rd. So now what we are going to do, we are going to sell current week call and put. So I am going to select around 25 to 30 rupees premium. So 17,250 is trading around 27. I am going to sell one lot. So the call side 17,800 is trading around 26 rupees. I am going to sell one lot. Okay, now we will go to next expiry 30 September. I am going to buy the similar premium put option and call option. 16,950 is trading around 25 rupees. So I am going to buy one lot. And on the call side, so 18,000 is trading around 26 rupees. Okay, this is our payoff chart. So max profit is 1,970. Okay, so we are going to close this strategy when we are at 2% profit. To create this strategy, we need around 45,000. So if we are come to 900 or 800 profit, so we are going to close this strategy. Okay, so I am going to forward. So 17,542 will go forward. I will tell you when to do adjustments. So whenever we are coming closer to our break even, so we are going to do adjustments. Till then there is no adjustment needed. So 230 profit, so 583, 576. So Nifty is keep on increasing, 599, 330 profit, 607, 633, 631. So we are almost end of the day. 629. So what is our profit? 162. We'll go to next day. 738. Okay. So we are in negative. we'll go forward 742, 769. So what we can do, since the market moved around 250 points, so we are going to do some adjustments. Okay, we are going to shift the put option. Okay, so what is the current price? 12.35. So we are going to close this. So go to current expiry. So we closed 17,250 put at 12 rupees. So we are going to sell another put with a higher price. Okay, so 17,400 is trading around 20 rupees. So I am going to sell this put option. Okay, what is the upper break even? 17,877. Okay, little bit increased. So we will go forward 17,787, 739, 679, 627, 623, 642, 650, 583, 624. So almost we are end of the day. Our profit is 580. So now we will move to next day. Okay, there is a gap down. So what is our lower break even? 17,350. Okay, so we will wait for some more time to do adjustments. 514, 582, 595, 315 profit, 562, 32, 527, 521, 480. So 437 rupees loss. 440. So what is our break even? So another 100 points are there. So we will wait for some more time. So almost we are end of the day. 388. So we will do some adjustments. So we are going to shift the call side. So first we will close the call option. This is trading around 14 rupees. Open the option chain. So I am going to sell 17,600. So which is trading around 41 rupees. Okay, so now what is the lower break even? 17,300. So now we are going to adjust only lower or upper break even is going to breach. Okay, till then we are not going to do any adjustment because that will create some problem. We'll move forward. So the Nifty is climbing 17,550. So what is our profit? 300. here one thing we need to note down. So whenever the market is moving in one direction and we did some adjustments, then the market is reversing, so it comes to the middle of the payoff chart. Okay, so we can close the strategy. Okay, if you keep on adjusting on both sides, so what will happen, our probability will reduce. So to avoid that, so whenever the market goes in one direction and come back, so we need to close the strategy. So as per that, so we can close the strategy. Okay, so for video purpose I am going to continue, so we will go forward. So 570, 581, 590, 590. So we are in 22nd September. Okay, so 827 profit. So 560, so 835. So almost we reached 2%. So if we are not closed earlier, so we can close now. Okay, so in all calendar spread we cannot expect more profit. Okay, and also one more thing, the payoff chart shown here, it is not always accurate. Based on the volatility and the option premium, this chart always change. Okay, so that's why I am telling that. So whenever we are in profit of 2%, we can close the calendar spreads. So anyway, I am going to continue. Let's see what happens. So 572, 581, 582, 552. So we came end of the day 684. So see, our break even is broken. So 1000 rupees loss. So 719. So here we will try to do some adjustments. So what I am going to do, I am going to close the put option. This is 3 rupees. And I am going to sell. I am going to sell put option around 17,700, which is trading around 32 rupees. So look at the chart. We are not going to make any profit if the market moves either direction. Okay, it is always better to close whenever we are in profit of 2%, or the market goes in one direction and come back to middle level of the chart. Okay, so in coming videos we are going to see other type of calendar spreads and their adjustments. Whoever not subscribed to the channel, please subscribe and join my Telegram group. So thank you for watching the video.